The story of the UK is an economy that has got real momentum.
What is broken can be repaired. What is ruined can be rebuilt.
UK inflation is becoming much more homegrown.
We have huge potential as an economy in the UK.
This is a time to tell Israel there is a path to peace.
Our plan for the British economy is working, but the work is not done.
You're listening to Bloomberg UK Politics. I'm Yuan Potts.
I'm Lizzy Burden. And I'm Caroline Hepker. Welcome to the programme.
Now, guys, what were you doing on the 20th of October 2022? Does that date ring any bells?
Yes, it does. And you're going to give my PTSD a big trigger, Yuan, if you carry on.
But it was, of course, the day that Liz Truss was forced to resign from office after just 45 days, making her the shortest-serving Prime Minister in history.
Yes, well, it was feeling like something of a distant memory, but we're bringing it up for a reason. Liz Truss herself acknowledged that markets played a big role in her eventual ousting. Truss knew, or at least became aware, of the power that markets wield politically. She even adjusted the mini budget to convince them of her fiscal responsibility. At the time, you may have forgotten, but Bloomberg reported that at least £300 billion was wiped from the combined value of the UK stock and bond markets just in that first month of the Liz Truss tenure. Investors were describing the UK as uninvestable. Truss defended herself in that now pretty infamous opinion piece that she wrote in The Telegraph, claiming that she was brought down by the left-wing economic establishment.
Yes, we financial journalists and markets are part of the blob, apparently, along with the Bank of England, the Office for Budget Responsibility and the Civil Service. But it's an important lesson, isn't it, for the main contenders to be Britain's next Prime Minister. We know that Rishi Sunak has to call an election by January 2025. The spring budget on March the 6th is going to be a key opportunity to close the poll lead that Labour's got, a double-digit poll lead, more than 20 points at this point. And the Chancellor, Jeremy Hunt, is really going to try to lay some tax-cutting traps that it'll be hard for Keir Starmer to climb out of while trying to maintain his own spending pledges.
Yeah, that fiscal box that Labour's got itself in just seems to be getting tighter and tighter. Starmer's party have already said they're going to keep Jeremy Hunt's big business tax cut. That price tag comes at £11 billion. And they won't reverse the national insurance tax cut. That's another £9 billion. And if Rachel Reeves fancies changing the rules to allow more borrowing, then I think the experience of October 2020 is going to be pretty front of mind for her when the markets shouted a very loud no at Liz Truss. So I think the Shadow Chancellor will be very, very cautious about that. We're going to discuss what it will take for markets to trust Labour a little bit later in the show.
But first, let's take a look at Labour's first big pitch to voters. Keir Starmer's firing the starting gun on the general election campaign this morning with a speech in Bristol. Take a listen.
Politics shouldn't be a hobby, a pastime for people who enjoy the feeling of power. And nor should it be a sermon from on high, a self-regarding lecture, vanity dressed up as virtue. No, it should be a higher calling, the power of the vote, the hope of change and renewal married to the responsibility of service. That's what I believe in. I believe it's still the best way to change our country for the better. Its success or failure is written into the walls of every community in this country. So this year at the general election, against the tide of cynicism in Westminster, the gauntlet of fear the Tories will unleash, and most of all, the understandable despair of a downtrodden country, I will ask the British people to believe in it again. I will say, you're right to be anti-Westminster. Right to be angry about what politics has become. But hold on to the flickering hope in your heart that things can be better. Because they can.
So that was the opposition Labour leader Keir Starmer speaking in Bristol this morning. And listening intently to that address was Bloomberg's politics reporter Ellen Milligan. She's here to share her first reaction. Ellen, thanks for being with us. Your key takeaways.
Well, you're right, Lizzie. He was firing the starting gun on a general election year. He opened the speech saying whether the election is held in spring or later in the autumn, the moment that power is given to the public to decide whether it should be a Conservative or a Labour government is getting closer by the second. And he really opened by talking about the culture in Westminster. It was quite interesting. He kind of lent on some populist rhetoric, saying that people were right to be anti-Westminster. They were right to have, a deep sense of apathy and anger about what politics has become. But he urged people to kind of hold on to that last flicker of hope for change. And he called the Labour mission Project Hope, not a utopian miracle cure, but a kind of credible hope that gives people a light at the end of the tunnel.
Really interesting. Interesting that he also picked Bristol in the west of England. Was there any substantial policy detail, though, that came from this? Because frankly, for the last 6 months, we've been waiting to understand what's the policy going to look like in reality.
Well, you're right. The speech was very heavy on the rhetoric, but I think in terms of policy content, the most interesting part was towards the end, kind of more in the Q&A on the economy, where, Keir Starmer spoke again, something that Labour have been stressing, that they want to focus on economic growth before they make spending and tax promises. But there were some really big hints in there that if they're going to cut taxes or promise to cut taxes in an election campaign, they would focus on what Starmer describes as taxes on working people. So that's things like income tax, national insurance, rather than business taxes. And he also came down really hard on the kind of Tory plan that's been floated for about 9 months now about cutting inheritance tax. He said he fundamentally opposed cutting taxes for people who are well off when there's nothing on offer for working people. So that really gives you a sense of where tax cuts would come under a Labour government.
Do you think we're any clearer to getting close to how Labour is going to fight the next election? Because so far it's really been about caution, hasn't it? It's been about caution, stability and not upsetting the horses. Do you think Labour is starting to move beyond that now?
There was one line that Starmer said that, we want an election on the economy, which is something that they've really kind of springboarded off since the kind of Liz Truss days, where the economy tanked and they were able to seize on something that has traditionally been conservative ground. And I think that's also interesting because, we had Bloomberg Economics today forecasting that inflation could hit its 2% inflation target by spring. So the fact that they still want to fight the election on the economy, even as we see signs of recovery, especially if the election goes to autumn, is interesting. But also, there was a lot in there about a decade of national renewal, employment rights. Their big 28 billion on green energy, those kinds of things. But they're stressing those policies that they've already announced.
We're going to be speaking to the economist Gerard Lyons later in the programme. I'll be interested in his take on how the economy is faring for Rishi Sunak. But let me just ask you, Ellen, Starmer here is presenting himself as the change candidate. How worried will he be that voters simply don't think he can change anything and don't actually turn out to vote?
Well, you're right. Well, Labour see two big roadblocks in their way to kind of seizing those keys to number 10. One is obviously the incumbent Conservative government, but the other one is, like Starmer, addressed in his speech, a deep sense of apathy among the voting public. You see in the polls, Labour, of course, leading by about 20 points, but there's a lot of don't knows in there, and they are really worried about people staying at home. And so he's attempting to balance it by addressing that apathy, but I guess the risk is that he leans too far into that populist rhetoric by talking about being anti-Westminster and angry about politics that may not, fare so well for him in the long run, because he's not that kind of figure. He is that, he is a kind of, technocrat figure, a bit similar to Sunak. So that's the balancing act that they're attempting to play.
Ellen, thank you so much for joining us. That's Ellen Milligan, our politics reporter. So Keir Starmer clearly trying to lay out some of the key themes which we're going to see in this election year.
Now, Keir Starmer's speech today might have centred on big picture thinking, but we're anticipating more details on Labour's economic policy in the coming months. Those details are going to be crucial to whether he can convince the bond market he's trustworthy. And to discuss, we're joined in studio by John Authers, Senior Editor for Markets, Bloomberg Opinion columnist, and beware, author of The Fearful Rise of Markets. What better brain for this conversation? John, The bond market ousted Liz Truss for her unfunded tax cuts.
Yes.
Will it do the same for Labour if it doesn't trust Labour's spending plans?
I would be surprised if they did, partly because Rachel Reeves is how can I diplomatically put this, a somewhat more cautious personality than Liz Truss and Kwasi Kwarteng. You know these people better than I do, but I think you might agree with that one. And they know, and all incoming Labour governments know, that they've got to be careful with the markets. There's been an air of that goes back at least to Harold Wilson, that they've always been concerned about this, and they are much less likely to make that mistake as a result. Again, think of Ed Balls going around doing the rounds of the city before Tony Blair got in, etc. The other reason I don't think the markets are going to have a big problem with Labour is simply that the markets know, and the politicians know, that they're not going to be able to spend a lot of money even if they want to. This is the sort of terrifying example that came from the gilts crisis under Liz Truss. There are points, yes, it was primarily the extremity of that accident was driven by LDI pensions, but it wouldn't have happened if there wasn't a point at which the bond vigilantes kick in. And anything similarly radical with more spending rather than tax cuts would almost certainly get the same response. So I personally don't see much risk that any kind of accident like that is going to happen. There are plenty of other risks, but I think everybody can see this one coming far enough away that it won't arise.
OK, so plenty of other risks. Is the UK market actually that bothered at all then about the general election? In a year where you have central banks who are pivoting, rate cuts are coming, and there's so much geopolitics that is so febrile now.
Well, I think the American election, you could certainly argue, is more important to Britain than the British one, or to British economic policy. You could certainly make that argument. When it comes to the UK, given where the two major parties are at the moment, it probably doesn't matter that much. The Bank of England is trying to demonstrate independence, but has a very clear mandate which circumscribes its role for the time being. And fiscal space, or lack of it, is such that there's not a huge difference that either party could make at the level of fiscal policy. What's different compared to the States is a number of culture war issues in the States, or apparently culture war issues in the States, have a very big read-through to the economy. So the backlash against ESG, which would probably intensify under a second Trump term, does actually have pretty tangible business effects. And the whole China issue, which tends to be viewed through a cultural prism, but it's actually pretty hardcore economics. How far protectionism is going to go, how far deglobalization is going to go. Those are hugely important for the States and for Britain. I don't see. You can be a little calmer when you're viewing England from the other side, or from the other side of the Atlantic. I don't see that kind of scope, that kind of range of views here.
Yeah, I wanted to ask you about that view from across the Atlantic of American investors. That you're based in New York generally. The FTSE has just celebrated its 40th birthday. I think it's probably fair to say that early middle age is not treating the FTSE very well, is it? It's been a tricky few years for London's markets. Is there anything that Labour can do to turn around the fortunes of the City of London, particularly the stock market?
There's not a lot that. Well, if we're talking about turning around in the way that you turn around a tanker, i.e. very slowly and gradually, yes, there probably are. It would require, however, the kind of dull reforms that don't get you any votes in the short term and that people don't particularly notice. I think one of the, I wrote my analysis on quite how horribly the FTSE 100 has done. And you could certainly make an argument, and this again comes back to the gilts crisis and the kind of weight that pensions had in bonds, that out of an attempt to make pensions more secure, we have seen the holdings of pensions in stocks go from more than half 20 years ago to under 10% now. That's a lot of money. That makes a very big difference to how much capital is available to companies, and it makes money available very cheaply to the government if somebody is forcibly buying all these bonds. So there are various dweebish proposals you could try where pension funds get given incentives to invest in, through effectively do industrial policy or enterprise zones, or there are things like that with reforming the pension system that could, in time, make a pretty big difference. The thing is that it's very technical stuff. A dweebish junior minister for either Labour or the Conservatives would be equally capable of doing it. And there's not really much ideology involved in whether you get it right or not. Pension reforms, Margaret Thatcher's big attempt to do pension reform, personal pensions, was a disaster. And that certainly wasn't due to any lack of commitment to the private sector and to the market. Yes, there are things they can do. I cannot imagine anybody getting into a big argument during the election campaign over whether to collectivise pensions plans and come up with tax incentives for early stage industrial investment. That's not what this election will be decided on.
Well, a lot of those dweebish, dull reforms have been underway by Treasury ministers.
Yes.
To prevent reforms to the pension system, easing regulations for the city. In terms of the budget in spring, is there anything that the Chancellor can do to really move the dial when, as Yuan says, the FTSE is looking so unattractive compared to US stocks?
I don't see it. I mean, I can talk further if you like, but the bottom line is, I don't think Jeremy Hunt has anything like enough room to do anything that any of my normal readers, any investors out there would even notice. I mean, yes, there are. I'm just remembering. You could try something really fiddly, like increase the allowance a bit so that everybody gets £100 off their tax bill. I can remember Conservative chancellors have done that in the past. With a bit of imagination, he can show willing. Which would be good politically, that might help move the dial politically a bit. In terms of the economy, in terms of whether the people who read my columns in the morning are actually going to put more money into gilts or British stocks, I cannot think of anything, given the current restrictions from inflation not allowing rates to come down too much and there not being fiscal space. I just can't imagine anything that he could do that would really move the needle.
So, John, thank you very much for being with us. John Authers, our senior editor for Markets, Bloomberg Opinion columnist. Thank you so much for your time. So a very difficult picture being painted by John. Thank you so much for your time.
So that was pretty bleak from John Authers. Nothing that Jeremy Hunt can do can move the needle for UK markets because of inflation, high interest rates and all those fiscal constraints. There's nothing that he can do to create a big enough splash to attract US investors. Well, that was his view. Now let's speak to a man who might be a bit more optimistic. Gerard, Lyons, Chief Economic Strategist at Netwealth and a board member of two firms in the city. Now, Gerard, have the Tories lost all of their traditional support in the square mile? Is there something to fight for given the state of the UK economy and the FTSE's rotten run of recent years?
Yeah. Well, I think it's always important to bear in mind what Tony Blair said when he was Prime Minister. He said that between elections, people tend to judge the government relative to their expectations and their ideal. And it's only at election time that they're forced to judge the government against the alternative. So certainly there's been disappointment with the government in the last few years for a whole host of reasons, not least the state of the economy. But obviously, as we approach the election, whether it's in May or November, as people are now assuming, it's about the choice between the government and the alternative. So in terms of how that influences how people see things, we could start to see change over next year. But there's still lots of uncertainties, not least about the outcome, never mind the timing of the election.
Yeah, no, absolutely. And I can understand that the Conservatives would certainly put it in those terms. But when it comes to, understanding financial services in the City of London, do you think that the Chancellor has gone far enough to try to give the City of London, which is this huge economic engine in the UK, enough of a shot in the arm? John Authers, Bloomberg Opinion columnist, usually based in the US, but here speaking to us today, was saying, look, there's really nothing much Hunt can actually do to sort of convince investors. That's very bad for Britain.
Well, I think there's two different aspects to it. One is the macro picture that John was probably touching on. I didn't hear his interview. And the other is the city in terms of a wider perspective. And there, I would actually say the last couple of years have been quite good. I wrote a very critical piece of the government a couple of years ago for Policy Exchange, saying that there had been what I call benign neglect towards the city. And I think that has changed significantly in the last 18 months. And there's two aspects to that. One is about the city playing a bigger role in terms of helping the UK economy. And there still is a lot more that can and should be done there. But what has really changed is improving the competitive position of the city. So in terms of financial services, I think the last 18 months have been good. And I would expect that to continue after the election, hopefully whoever wins. Coming back to the macro picture, it comes down to the nuts and the bolts about the growth rate, the inflation picture, and also the fiscal stance. And the challenge in the UK, and it's a challenge I would say faced by most of the G7, is that even though prospects for the next year might be better now than seemed a few months ago, the reality is over the next few years, the UK, like other Western economies, faces a backdrop of relatively weak growth. Inflation may be low, but interest rates are likely to settle at a higher level than a few years ago. And the debt backdrop doesn't give much room for fiscal maneuver, whoever wins the next election. So the lingering fear of a debt trap is there. That is really tied in because of the poor fiscal stance. So when one looks at whoever wins the election in the city, there's two different aspects. One is about what needs to be done to help financial services more generally, particularly making them more competitive vis-a-vis the continent and vis-a-vis Asia, and in particular versus New York. And the second aspect is the broader macro picture, which ties into growth, inflation, and interest rates in particular.
Well, does the next government, have any room to be bold, Gerard, given that the bond markets really put the guardrails on the UK under Liz Truss?
Yeah, well, it's very important to keep the financial markets on side, not only in terms of financial stability, but also in the sense of if the markets give you the thumbs down, that can have very negative, wider implications, not just in terms of feeding on itself in terms of the city, but in terms of actually impacting the wider economy. One has often seen this more in terms of currency markets, but over the last couple of decades, one has seen it a few times in terms of, say, if we really want to go back, it was Mitterrand when he was president of France, then Clinton when he was president in the States, and more recently, as you touch on, in terms of mini budget. So the important message is that one needs to keep the markets on side. Of course, on top of that, there's also the issue in terms of looking at things in the current context of the time. 18 months ago, the focus was very much on inflation, and the markets were rightfully concerned about the anti-inflation credibility of the UK, not convinced by the Bank of England at that time. Then the mini budget came along. If we look ahead to the next year, I think the focus of markets is already shifting. And I think we've shifted from a focus on inflation to more particularly a focus on growth. And by the time of the election, whether it's May or November, growth might be more center stage. But nonetheless, one needs to have a credible fiscal plan, not just in terms of the immediate outlook, but also keeping the markets on side about what may be further down the road.
Yeah.
And that certainly is the case.
And actually, that does mean that the UK is more of an outlier in terms of the concerns that bond markets have had. It does make the UK more of an outlier in the G7. So now, looking forwards, there's a lot of speculation about tax cuts that the Tories want to bring in Jeremy Hunt in the spring budget. Is there a danger that Hunt sort of retreads, i.e. does a bit of a Liz Truss again? That's very dangerous, isn't it?
I think that's probably overdone in terms of your question. Certainly when one looks at the spring budget, obviously the government has set itself fiscal rules, and then the OBR forecast that comes in on top of that. So there will be fiscal space, so to speak, in the March budget. And how that money is used, whether it's used for spending increases or whether it's used for tax cuts, remains to be seen. But as you've touched on, in all likelihood, it will be tax cuts against the backdrop, has to be said, of a tax take that's pretty high already. But when one looks beyond that, when you say the UK is an outlier, the challenge when we look at the G7 is that it's France, then followed by the UK, that are very heavily reliant on overseas money in terms of purchasing government bonds. So there's a very important need in the UK, as there indeed is in France, and one would say elsewhere also, to keep international investors very much on side. So it's very much coming back to the spring budget or whichever fiscal event one's talking about over the next 12, 18 months. One needs to address the immediate issues in front of you, and growth is more of a concern. But at the same time, whatever you need to do or must do needs to be credible, whether you set yourself your own fiscal rules or more particularly against the backdrop of the time. 18 months ago, markets very focused on inflationary worries, hence any fiscal expanse there needed to be sort of fully discounted by the markets. The problem then was that they shocked the markets by doing things that the markets didn't expect. The lesson from that is that if you're using fiscal policy, then you need to do exactly what you've outlined to the markets and exactly what the markets have discounted. And if you then shock the markets, you shouldn't be surprised if the markets react in a certain way. And against that backdrop, both the Chancellor and one would say also the Shadow Chancellor are very mindful to keep the markets on side. Now, your questioning is talking about changing governments. Whether that happens remains to be seen. But the Brown experience is quite interesting. When Gordon Brown was Shadow Chancellor, I remember seeing him then when he did his rounds in the city. He very much committed to adhering to Ken Clarke's fiscal plans. And we then had the strange situation of very tight fiscal policy. Indeed, if one looks since 1971, I think there's only been 5 years when the UK has had budget surpluses. 2 of those were under Lawson in the late 80s, and then 3 were with Brown. And then we went from sort of almost famine to feast in terms of public spending, very tight fiscal plans to very loose fiscal plans subsequently. So I think both from the behaviour of the current Chancellor, it's about financial stability. That's also a lesson the Shadow Chancellor is having to take on board. So I think that's why the FT earlier this week talked about the UK having an election between 2 centrist parties. Now, you can always argue about all the ins and outs of wider policy, but when it comes to the financial markets, I would say that they view the UK as having not a sort of fiscal problem in terms of the next election. They very much seen the fiscal plans as sort of being in line with what the markets currently think. What happens further down the road will very much depend on whether the UK does achieve a higher trend rate of growth, and that remains to be seen. I think certainly we need to have a more growth agenda in the UK, because the current trend rate of growth, not just in Britain but in Western Europe, is very low. And if you continue to have a low growth rate, high interest rates against the backdrop of high levels of public debt, then that doesn't give you any room for fiscal manoeuvre. And we don't want to return to a situation we had before, where we return to monetary policy having to move to very cheap money, because that caused all sorts of problems for the UK.
Yes, but we return then to the fundamental issue for the UK, that economic growth needs to be better if we want to be more prosperous. Gerard, thank you so much for being with us. Gerard Lyons is Chief Economic Strategist at Netwealth and a board member on 2 firms in the City of London. Really great to have you on Bloomberg Radio.
Well, that's it for today. If you like the programme, don't forget to subscribe and give it 5 stars so that other people can find it on Apple Podcasts, Spotify or wherever you listen. I'm Yuan Potts.
I'm Lizzy Burden, and this episode was produced by Tiwa Adebayo and our audio engineer was Mariful Hussain.
I'm Caroline Hepker. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.